Well, it's that time of the day where I like to visit with our analysts at the CME Group in Chicago, find out what's driving the grain markets. And today, let's go visit with Todd Bubba Horwitz. He's positioned himself right at the edge of that active trading floor there. And he has a website that's called BubbaTrading.com. You need to check it out. He has a wealth of information on there and analysis, which we're going to get right now for free. So, Todd, thanks for joining us. I appreciate that. What's going on here in the grain trade? Why is it so weak in the knees today?
Good morning, Marlon. I may jump off the edge of the trading floor. You know, we're just in this really slow drift, punishing move. It's extremely frustrating. It's a little bit scary. But at some point here, you know, again, I'm telling all my guys to put everything in the bins and not sell anything here if you don't have to. I mean, this is becoming a point where they're well overselling all these grains. They're pushing them down to places that they won't be able to sustain these lower levels. You're going to see, you know, in the next couple of days, maybe a week, there's going to be some pretty big bounces. Now, the real question will be, will those just be dead cat bounces that are going to be sold into, or will those be the actual bottom and we'll start to get a rally? I tend to think that we're going to start to get a rally. I'm still fairly confident that it's going to be a good year, but it's certainly getting frustrating and it's certainly getting a little bit scary as these prices continue to push lower every single day and start to violate some of our lower support levels.
I've seen numerous, and I mean numerous, analytical reports that came out this morning, and they all say, well, the grains are all heavily oversold. They're due for a turn, but then they just keep, as you mentioned, pounding the way lower here. Is it loading up the short side of the boat here on the spec money here? Because I understand those large commodity funds that like to throw their weight around actually all have net short positions now in the corn, the soybeans, and the wheat as well.
Well, I think that's a great point, Marlon. Here's what's happening, in my opinion. First of all, you've got them pounding away, pushing down. Now, this is Labor Day week. You know, it's the last week of summer, and the markets are generally slow anyways. And what's going to happen, in my opinion, when everybody comes back from the Labor Day holiday, when money starts to come back from the Labor Day holiday, I think you're going to see one massive short squeeze. And I think these big firms, these big spec houses that are starting to short all this, they're going to get trapped here because they're going to have to be forced to buy at much higher prices. That would be what my expectations would be in this overall picture. So I'm very convinced that we're going to see a big short covering rally. And I think that's what, but you're getting the continue to push down. Why? Because there's nobody here to really get in the way. The markets are extremely slow across the board. You name a market, it's not trading very much right now.
And anytime you have a market that kind of sometimes defies logic, as they say, to me, I guess being, I guess at heart, kind of a contrarian, that always means somewhere there's an opportunity there.
Oh, no, you're 100% right. Again, you have to look at it from a basis model. And, of course, look at where the dollar's at, Marlon. I mean, the dollar's at lows they haven't seen in almost 2 years, yet grains are getting pounded as well as crude oil. So there's something is not right in the overall mix, and that's really due to, I think, the lack of real interest where the speculators who have the cash can actually force these markets in one direction. But as soon as the money comes back, I think you'll see a dramatic turnaround.
On the corn market right now on December, we have been trading under pressure today. We're still down 3.5 at 347.5. On the soybean trade, we have the new crop November down 2 1/4 at 939. And if you look at the wheat trade in Chicago wheat, now we have December down 2 1/4 at 425 3/4. We have come up about 3 cents off our earlier lows, so come up a little bit. Kansas City wheat has December now down 3 3/4 at 421 3/4. And in Minneapolis spring wheat trade, we have December now 5.5 lower at 658 3/4, about a nickel off our earlier high. Cotton market today has been on both sides of unchanged, and December now 24 points higher. It's starting to get another head of steam behind it. 70.07 per pound is now our last trade. We'll be back in just a moment talking with Mr. Todd Bubba Horwitz of Bubba Trading when we come back. And just on an interesting graphic, if we can go back to that graphic of the U.S. dollar index right now and see where it stands. This is interesting. I don't know if you had noticed that earlier today, but September futures here now under 92. We're at 91.930. That's down 210 points once again. Very interesting trade there. The crude oil market, we can take a peek there too. Lots of interest in that this week, where it has really kind of sagged with everything going on in the world. And we've been watching the crude oil trade and also the value of the heating oil as well. Right now, crude oil down 22 cents on a West Texas Texas crude. That's October we're talking about. And now at 46.35. So a little weaker once again. Excuse me, this morning. Heating oil trade, in case you're wondering, this is how they trade diesel fuel. We're up a penny and a half once again. September trading at 165.1 per gallon. All right, we'll go back to Todd Bubba Horwitz, BubbaTrading.com in Chicago, and get his thoughts on the livestock trade here. Live cattle, we were trading higher and lower today. Let's take a look at our live quotes here, Todd. On the live cattle board, we're now at $1.13 lower at 107.25. So we are now at $1.60 off of our earlier high of the day. December down 98 at 110.40. On the feeder cattle side, we have September currently trading at 144.65. That's a big turnaround, almost $2.50 now off our earlier high. We're down $1.23. October down 152 at 144.88. What made this market hit the skids here right after the open?
Well, I wouldn't really worry about hitting the skid tomorrow. I think it's done exactly what we've kind of scripted here on air. You know, we were looking for the 105 level. We hit 105. We had a nice little bit of a rally. We pushed up and we got almost to 109. Now we're just selling off a little bit. I mean, I think this is another buying opportunity in both fats and feeders. You know, those levels we looked, we met all our downside objectives. I think we go much higher here. Now again, it's not. First of all, we don't want it to go in a straight line up because all that is usually panic buying, and then it just falls back and it usually goes lower. We like this kind of action up. You know, 2 steps down one and then up another 2 after that. So that's what I'm looking for. I think we test before we even think about selling is 112 in the fats and probably 150 in the feeders before I'd even be concerned or even think about getting out.
Well, I know the other day you were talking about getting back in there on the buy side around 105, I believe, on the fat cattle, which I believe you did. And we have had the corn market really struggling to get any traction. So you would think that would offer a little more help to feeders. Right now, temporarily, it looks like they're taking a break. Lean hog trade, though, this market is just confounding a lot of folks. We have October lean hogs down 94 at 60.68, December down 98 at 56.60, so we're under $57 now on the December contract. On the pork carcass cutout values and the belly market that was released by USDA late yesterday, we had the carcass value down 31 cents again, and there go the bellies down 6.21 yesterday afternoon. This wholesale trade is just completely falling apart here on the pork side.
Well, Marley, if you listen to RFD TV, you know that we've been calling for like 62 or 60 for quite a while here, and we're finally seeing that move. I think you've got some more down to go here. I would not be a new seller here. I think you want to now look for opportunities. I think the first opportunity would probably be 60 based on the action we're seeing now, that we should start to see a little bit of a rally. But again, historically and traditionally, this is a slower, weaker time of year anyways. I think, you don't want to get too carried away, but we got way up there where we didn't belong, and now the markets are doing what they should be doing. And I think when you get to 60, you want to look to be a buyer. I think that's probably a good opportunity, and that's one of the reasons that we recommend you always hedge the market so the actual down movement never hurts you.
Very good. Thank you, Todd, for explaining all that. Todd Bubba Horwitz, the raging bull at the edge of the CME Group trading floor in Chicago today. So thanks for the comments. Talk to you again soon. Interesting stuff. Hogs just cannot catch a break.
Can't catch a break this week.
Yeah.
All right. Well, thanks again, Marlon. Appreciate it.